The difference between the rich and poor. Robert starts the book by describing the main difference between the rich and the poor. Both poor and middle-class people work for their money. The rich have their money work for them. Those who are not wealthy will always pursue traditional ways of making money. If you study hard and get good grades, you can get a stable job with solid benefits. The reason most people choose this path is because they are scared of running out of money. This desire to receive a paycheck is immediately replaced by a desire to spend what they have earned. Even if these people receive a bonus or raise at work, they respond by spending more money. These people feel joy in having money, but the joy never lasts long. Therefore, they continue to work to satisfy their desires and overcome their fears. Roberts recommends taking a step back and forgetting about the salary. Start thinking about innovation. Most people are stuck in the hamster wheel and miss obvious opportunities. If you're willing to take a step back, you can take advantage of opportunities to make more money. Robert explains that it's much safer to invest your time in building assets that generate money. Change yourself. Robert emphasizes that it is important to learn that it is easier to change yourself than to change the people around you. Therefore, instead of blaming others for not being better off, you need to accept that the problem is with you. If you recognize that you are the problem, you can change yourself, learn something, and become wiser. Learning requires a combination of energy, passion, and desire. This means that you need to learn how to use your anger in a positive way. Robert explains that anger is so important because passion is nothing more than a combination of love and anger. We must be guided by passion, not fear. Use accounting to keep your money. Most people believe that making money is the most effective way to get rich. You need to make money, but it's more important to know how to keep it. Wealth is not your net worth. Wealth is the number of days you could survive if you quit your job today. Accounting is not the most exciting subject. Nevertheless, Robert believes that if you want to get rich, that is the most important thing. The first and most important lesson is that you need to understand the difference between assets and liabilities. Assets are things you want to buy. The rich are those who acquire assets, the poor are those who acquire liabilities. Assets are things that put money in your pocket. Liability is anything that takes money out of your pocket. A lot of people think of buying a home as buying an asset. However, there are a lot of liabilities associated with a home. You have 4,444 mortgage payments, insurance, property taxes, and a lot of money tied up in the home. So you have to think of the home as a liability. Identify assets that you can buy to cover the debts associated with the home. How taxes have benefited the rich today. The wealthy are playing a smarter game. They legally evade taxes while the middle class shoulders the bulk of government spending. It used to be that the poor and middle class passed taxes to tax only the wealthy. Instead of punishing the rich, taxes now punish the poor and middle class. Once the government got a taste for money, its appetite grew. The problem was that the government's hunger for money was so great that it soon had to raise taxes on the middle class. That's where the money started to trickle down. An important tax tool used by the wealthy is Form 1031. Form 1031 is also known as a like-kind exchange. A like-kind exchange allows you to defer paying capital gains taxes when you sell real estate. You can do this by using the proceeds from the sale to buy another property. Additionally, corporations allow you to set up separate assets that generate income. The key here is that individuals are taxed before their expenses, while corporations are taxed after their costs. This simple rule allows you to legally deduct vacations, car expenses, gym memberships, and restaurant meals. The poor spend their money after they pay their taxes. The rich use their money to pay taxes. The rich are better than the intelligent. They have learned how to legally avoid taxes. This is only possible because the rich are financially literate. Finance is not taught in schools, so the average intelligent person does not understand how the rich avoid taxes. Instead of being punished by the government, the rich are reacting to tax laws that are being enacted. Here are the 4 fundamentals of financial literacy provided by Robert. Accounting. The ability to read and understand financial statements. Investing. The science of making money, creativity combined with strategy and formulas. Understanding markets. The science of supply and demand, technical, emotion-driven, and fundamental, economic sense, investments. Law. Understanding taxes and avoiding lawsuits. If you enjoy this part, you can see the last part of the book summary in the next video. Thanks for watching. Share it if you think it is useful.